Fixed asset or fixed assets is a term that is mostly used in almost in every organizations. Most organizations, especially the budget controllers or the budget owners, and as well as the entire accounting department of any organizations. Fixed asset is a term that is daily discussed among these budget owners as well as accounting departments. But what is it, a fixed asset? And is it the same thing as property, plant, and equipment? The answer is yes. A fixed asset is literally used in almost every organization, literally in every conversations. In the offices, people or officers, they talk about fixed asset. And according to accounting standards referred here, the International Accounting Standard 16, it deals with property, plant, and equipment. Now, property, plant, and equipment, or PPE, we will refer in this lecture as PPE or fixed asset. PPE is a word used by this accounting standard to group all of the fixed assets of PPE together for the purpose of an organization to organize and manage the fixed assets. And as well, it should be a term used to group an entire fixed assets of an organization. So first, let's define what is fixed asset. So fixed assets are defined under this International Accounting Standard, which is IAS 16. Here, the standard defines that property, plant, and equipment, all these three items are defined to be assets. That's first definition. Second, these assets, property, plant, and equipment, has to be allocated with carrying amounts. They has to have what is called depreciation charges and as well impairment losses. If an asset can be measured through its carrying amounts, depreciation charges, as well as impairment losses, then that particular item can be allocated as an asset. Asset is said to be held for use in the production of the organization. So if an asset can able to assist the organization to produce whatever that organization is producing for the purpose of resale or to generate revenue, then that item is said to be an asset. So we can easily think about delivery trucks. We can think about factories, for example, or for printing companies. We can think about photocopies and printers or computers. For poultry farmers, for example, we can talk about the equipments that hold the chicken foods and water and so forth. So these are an example of what it means to be held for the use in the production. Secondly, it helps with the supply of goods and services. So if a motor vehicle is used to carry or to transport lawyers to court, transport tax accountants to visit tax clients, accounting clients, for example, or vehicle, as I've just mentioned, if they are used in the supply of goods and services for that company or the organization or the institution, then it is also defined to be an asset. Or if you have a vehicle and that vehicle is put out for rent, people can come and hire, for example. Or if you have properties to be rented out to clients and your function is also in line with car rental, for example, or leasing of property. These are whatever you do in this process, or whatever assets or whatever items that we use in line with these operations. These are also assets. There are assets that are not contributing to your production or to your supply of goods and services, or to helping you to generating revenue. So administrative assets, for example. So this one, we can make an example of it, like say, take for example, the offices we are located in. That office is not contributing anything to generating income, but it houses, for example, the office of the GM or office of Chancellor or office of the Managing Director, for example, as well as the supporting departments, the human resources, the accounting department, the procurement office, all these. Or example, in an institution, you have a library, for example. So these are the supporting items. This is based on the standard. It can be allocated as an asset. And also, this standard is also wants us to account for bearer plans. So the bearer plans is, for example, if you have an agricultural company, and that all your apple plants, for example, or your orange plants, they are bearer plants. They can able to provide or to bear fruits for that organization, and in a way we can generate revenue out of it. So bearer plants such as apple tree and orange, for example, these are also fixed assets. However, the fruits that you generated from these, they are not assets. They are caught in another accounting standard, which is IS2 inventory. So here we register the plants or the bearer plants as asset, but on the other hand, whatever those plants are producing, their fruits, for example, are treated as part of IS2, which is the inventory. So it's kind of tricky, but I think what we should remember here is the definition of asset and what bearer plants needed to be accounted as assets. The other one is it has to be at least giving you a benefit for more than one period. So that's another definition. So if you have an item that is deemed to be an asset, but its value will be finished by within the next 12 months, it will not be defined as an asset. So basically think about what's asset is to the definition of IAS 16. The last point I want to emphasize here is tangible. An asset is something that you can able to feel and touch. So an asset can meet all the criteria, also all the criteria that I discussed. But if one of the assets is not touchable, you cannot feel it, you cannot touch, then that is not an asset. So you think about these definitions. So we covered already what is an asset. So this will give us a kind of understanding of what is an asset to the definition, to understanding what is it. So this knowledge of understanding an asset, it allows us, companies, or allows the accountants to able to identify that this item needs to go into our fixed asset register. So these are the kind of knowledge that we need to understand in order to qualify a certain item to start looking at it to be registered in our fixed asset register, which I will go to cover later. An asset is an asset if and only if. Second, the first point, it is probable that future economic benefit associated with the item will flow to the entity. So it means whatever happens to that asset can be generated some economic benefits that will flow to the entity. Remember, future economic, a probable future economic that will associate to the entity. Then, if that condition is met, then we can say that it is an asset. The cost can be measured reliably. So if the cost, if we can determine the cost, if you can determine the cost, then that's how you are going to enter that in your fixed asset register, based on the definition and based on this costing. But what is a cost? Well, a cost is, we can start off with purchasing price. So if we look at a motor vehicle as an example, the purchase price. So here we probably have two or more options to purchase for a motor vehicle. One, we just go to a local dealer around in town, and then we said, okay, can we pay for a vehicle? So they bill us, or they give us a quotation. So maybe the quotation includes import duties and also some taxes. So if these are the things that are part of the quote when you wanted to pay for a vehicle, as an example. So whatever duties that you pay in relation to the asset or to the vehicle is deemed to be the purchase price. Or if you are an organization or civil organization, civil society groups that, normally these charitable organizations, they have tax exemption. So because of that, your purchase price must also minus the exemptions or the rebates that you have before you pay for the purchase price. So a purchase price is obviously the import duties, the freight that allow that asset to be imported in. So these are the things that you need to include in purchase price. The other option, you probably opt to purchase out from overseas other than local. So whatever cost, the freight and so forth that you incur to bring that item or the vehicle or the asset into the country, up to where you start using it, the whole cost from purchase that, as well as the transport, as well as the freight and the import duties, these are all the part of purchase price. And any cost directly attributable to bringing the asset to the location and conditions necessary for it capable of operating in a manner intended by the management. So this I've just explained, as well as cost of an asset. So if, as well as the last part refers to if we really wanted to build an asset, but before we build an asset, there is also a rundown asset, a rundown building, for example, or is located there. So if we want to build a new building, we must first do something to the existing rundown structure. So if we dismantle that, then we incur costs for people to dismantle it and remove all these garbages to somewhere, and then we start building a new asset. That new asset that we build, or the new building that we build, its cost will be included along with the dismantling, as well as the removal, the transport of getting all this cleaning up, and all this cost will be added to the new building that we're building. That's what it means by the last point. Recognizing the assets that we already discussed. Remember, we finished definition, we finished the determination on what cost to include into the assets that we defined. So here we need to understand that in order to get your assets or group of assets into your financial statement, we need to at least, or an organization needs to at least agree on the model that you are going to use. These are two models suggested by the accounting standard. One is the cost model. The cost model is nothing other than the cost that we discussed, then we minus by the depreciation, and also if there are accumulated losses. So it's only three components here. The cost that you put into that we already identified, then we minus by accumulated depreciation, as well as accumulated losses. That will give us the cost that should be disclosed in our financial statement. That's what it means by asset recognized up here. So that's the way the cost model is expected us to account for an asset or assets. The second method is the revaluation model. The revaluation model requires us to ensure that the asset has to be updated on its market value or revalued amount. So at the end of every financial year, before we disclose an asset into a financial statement, we need to understand that the asset has to be reliably measured and carried a revalued amount. The revalued amount must be determined by an external party or an external expert person or expert officer who can be able to assist our organization to revalue assets. So if we use the revaluation model, every year on annual basis, we need to disclose or recognize our asset on a fair value amount. So the fair value it has to be revalued every year, and it has to contain at least the date of revaluation, and that revaluation must be minus any subsequent accumulated depreciation as well as accumulated impairment losses. Then on the basis on its disclosure, every financial year revaluation must be made regularly and kept current. So we have to ensure that they are disclosed in our books, but they must be upgraded to the market value, to the current market value in an existing economy, for example. So evaluation here has to be made on an annual basis before we disclose that in the financial statement. And also, for the purpose of some accounting books, is when there is an increase in the revaluation, that increase has to go into the comprehensive income. So take, for example, the value increases, the other double entry figure would affect our income, comprehensive income, as well as the accumulated equity. Unless they reverse, the situation here can be reversed if the previous revaluation decreases. If the previous revaluation decreases, then the revaluation decreases are recognized in profit and loss, unless they reverse the previous calculation. So put it this way: if we have an increase in revaluation, that increase affects these two balances. If they do not affect the asset, they affect this one as well as accumulated equity. However, it can be reversed if the previous revaluation was decreased in amount. In this case, we have to recognize this in the profit and loss, unless the previous revaluation has an increase. That is what it means by this section here. So that is what it means by recognizing an asset. So if we decide to, we define it, we find the cost. So because we already found the cost, we can be able to disclose that in a financial statement using these two models. And once you adopt that, you have to keep the consistency in disclosing your financial asset. This is a cycle that allows us to start thinking about acquiring or building an asset, for example. So building or acquiring an asset, for many organizations, the process is different. Here, this is a process of one of the organizations that I serve as a consultant. It begins with at least some planning at the policy level, and as well as some planning for multi-year investment programming. Remember, sometimes we build assets, and these assets has to has to flow into more than 1 year. So the way we manage our construction or our building of a new asset or acquiring an asset that has, moved into several years, we need to understand that there is a need of doing some planning here. And as well, we cater all these too into the way we manage our annual planning. So annual planning captures these two because we agreed on the policy level as well as the planning. Then we start to think about implementing and utilizing our procurement processes. So when we utilizing our procurement processes, then we can be able to acquire our asset. So if we acquire an asset, then we can be able to manage whatever we acquire based on what I just explained. Then if we're able to do that, then the next step is the accounting reporting. But most organizations, most public sector organizations across the Pacific, they have issues, sometimes this one, but mostly it's around these three sectors. The procurement, as well as the asset management, as well as the accounting report. But this accounting report is always a failure if these two are not supporting, if they are not efficient or effectively implemented. So in some countries, for example, their procurement, they vary. So in where I come from, for example, if a asset or an amount is greater than 500, it has to go to the central tender board, which all ministries have no power to do a procurement if the amount is more than 500. So if at the annual budgeting, for example, if your asset is desirable to be acquired at a value of more than 500, then whatever you agreed in that ministry, just an example, will not be determined by the ministry. You have to advertise it. Then the central focal point of all procurements will be addressing that. But there are others that will be under the powers of the ministry. So, for example, if procurement threshold is between 100,000 to 499, as an example, this one will be under the powers of a ministry. So, a ministry will be able to procure it. So, this is what we mean by implementing as well as understanding the procurement processes before you're able to have an asset in place. But it flows from top up to here. This one is the implementation of some policies or regulations or ordinances here. So when this thing is failed, you will probably have this asset management fail. So asset management here could include, for example, defining it and register in a fixed asset register, what models we are going to apply in terms of cost. We are going to cost recognition and as well. And if we can have this management in place, then definitely we'll be able to do that. So that's one thing I want to emphasize here. Secondly, most audited organizations, public sector organizations, as well as some civil society organizations, NGO, they really have issues with fixed asset register. This is the main thing here. If you are not able to have what it takes to deliver with a fixed asset register, based on experience, because I've been consulting in many organizations, as well as some the 9 provincial governments in Solomon Islands where I come from. Fixed asset register, which should be the backbone of asset management, has failed most organizations. So every year, this is seen of not having a fixed asset register or incomplete fixed asset register has always been raised by external auditors. So for me, I've been using this experience, so I believe that what I'm doing now will help organizations who have issues with this, and so as giving their adverse reporting disclosure to account the financial reporting in the financial statement. So this is what I really want to touch on this. I really don't want to touch on this because some of my courses will cover this area. So for me, I want to concentrate on this area because it is where most of the issues that are addressed by, requested by the external auditors for organizations to address. based on this diagram here, annual planning will allow us to, have the type of discussion around what asset, check our asset register in terms of our existing assets, to check our asset register whether we really need repair and maintenance for this year, whether some assets need to be revalued if we follow the other model, or whether some assets need to be disposed. So at the planning level, we should consider these things, as well as if we want to implement anything here, we need to at least ask ourselves whether the asset register is updated and whether whatever we are going to implement here will comply with our policies as well as our ordinances. And also at the end of planning, we'll be deciding on what sort of assets we need to acquire and what needs to be constructed, or which ones will going to be donated by donors, for example, or which ones we are going to fund but will cost into multiple years, or which ones will be affected by political decisions that probably might change in the next 12 years. So these are the kind of things at the annual planning where accountants have to sit down with budget owners or department heads to decide along what it means by planning for an asset. So if we have this understanding, so I just want to discuss this based on the practical experience that I've noted. So I'll give you an example. I have 6 years of consulting with the national and 9 provinces of government in Solomon Islands, as an example. When I consult, worked as a consultant for these 6 years and in 9 provinces, I think I've spent at least 54 times reminding each provinces that they need to update their fixed asset register. For 50 times they failed, which means that no organization or province have ever provided me with a complete fixed asset register that enable organization or a province to deliver and to effectively and efficiently record their fixed assets, so that they can be move that information freely to be reported in a financial statement. So what I found during those years was that every time I asked them for this information, fixed asset register, not only they did not provide me with fixed asset, but they also do not know what is it fixed asset, for example. And if one is able to log into the internet and type in Solomon Island Government Financial Statement report, you will note that the fixed asset register for Solomon Island Government Financial Statement report is even worse than the provinces that the government has. So we can look at this. We can look at it this way: if the provinces don't have a proper fixed asset management recording and register, then how would we expect the Solomon Island government, accountants in the ministry, to be able to effectively deliver their assets register and management recording and disclosure and recognizing for the government if the organizations as well as the statutory bodies, including the provincial governments, cannot deliver? So if we go into this fixed asset register, this one is, as I said, when I did my consulting oversight with these 9 provinces, for this entire 6 years, only 4 provinces, they managed to convince me with their fixed asset register. And so I was able to provide them with good marking when I did my consulting with that. I think it was 3 provinces. for only about 1 year, but the following years they failed by not updating their fixed assets. So only one organization have province have been able to issue them with a good marking for the fixed asset register. But this is what they provided me. They provided me at least with the department. This is the department, and so these are the assets that they procure, and also a description of the asset as well as the model. What model are they acquiring? And if there is a serial number, what was the original cost, and what was the purchase order or the check number, and where in the division this asset was allocated to, who was the custodian. Actually, I removed the custodian here, and then what's the quantity there. So here they put, for example, if this works department has an inventory, and this inventory is the vinegar stove, for example, then they note it in 2. So if we they have 2 quantities, so we only have the cost then, and so this is the process. So I say to them, okay, I will give you at least a mark for this, but there are areas that I really want to improve. So what are the areas that I want this province to improve on? And I told them, no, there is no depreciation information here. There is no, if you want to change to revaluation, think about the revaluation model. There is nothing in terms of revaluation here. There is no cumulative depreciation here. There is no information relating to prior or after a asset is being depreciated or being revalued. So they actually put the good data here by making various divisions, and they put the data. So they actually finish off with just the balance of all the assets that's being acquired and the original cost for all these assets, and that's it. So I mean, this is very advanced as far as all the provinces could be compared. So I said to them, okay, I have to give you math, but there are areas that I need to be improved. Okay, if you look at this recording is okay. There's nothing wrong with this recording except that it doesn't give the things that I want. But look at this. Look at this. This is very advanced in terms of the way I compare it with the rest for the last 54 times that I reminded our provinces to keep their fixed asset register so that it can give your financial reporting with a good finding as well as good audit by the auditors, for example. So this is one of the provinces that at least has. The rest is just a list of items, kind of like a shopping list. So these are the challenges that I face. So if you think about an auditor who is auditing an organization, look at how an auditor is supposed to audit financial statement and fixed asset based on what is required or what are required to be disclosed in financial statement, which I will show you later on. So these are the kind of challenges that facing all 9 provinces, but not the 9 provinces, as I said, in almost organizations. Even we're talking about University of the South Pacific, they are also affected by it. They don't have any proper fixed asset register to say. So having discussed this, I want us to go to visit at least few financial statements just to understand what are required for assets to be registered and recognized in a financial statement. And as well, we need to understand what our auditors are looking for and what are the important things that you need to keep your asset management in proper recording so that you can be able to satisfy your disclosure of your financial of your assets into financial statement, as well as meeting the testing criteria of auditors, for example. So this is a Solomon Island organization. It's this one is an SOE that dealing with cocoa and coconut products. So I want us to go to this today's financial statement and see how fixed asset is how fixed assets are disclosed in the financial statement on page 7, 10, and 13. So if we go to it, 7, 10, and 13, so this is 13. At least there is an information on the number of years that the assets are to be depreciated. So this is an information that you need to put into the financial statement policy. So if we're issuing revaluation, this is what you need to have the information to be catered for under the revaluation. And also this is your accounting policy. So this is the way SEMA, this company here, or this SOE, wants its financial statement to disclose its fixed asset register. So these are the month, and as well you need to check page 10 and 7. So it's page 7 and 10. Page 7 and 10, we should see the disclosure of the fixed assets. So in page 10, for example, if you go to page, this is page 10, then if we look at the current assets, the assets disclosure, it says that the assets are 13.4 million, and 13.4 million is disclosed in reference in note 6. So if we go to note 6, if we go to note 6, let me check 13. We go to 13. If we go to 13, it gives us the disclosure of the assets. Sorry, we just go there. Okay, so if we look at assets here, these are the asset categories: lease on land, building, revalue, plant equipment, as well as furniture and fixtures, office equipment, motor vehicles. So what it requires from this layer of fixed asset, it needs something like cost. It needs something like cumulative depreciation. And so this is the beginning of January, and this is ending of 2014. What's the opening balance? What's the addition for that year? What's the revaluation? What's the disposal? What's the depreciation? What's the closing value? And this is 2014. And what happened in 2005? What's the cost of valuation? What's the all this information? All this information, they are needed to be used and disclosed in the financial statement. So if you look at the financial if you look at the fixed asset that I have just showed you, there is no information of all these things. It's just one value, just a cost. So if this is the case, with the fixed asset register that I showed, who will be calculating their fixed asset values? So it's not going to be auditors. Your organization will face adverse findings from the auditors. So here we actually really wanted a fixed asset register to be disclosed so that it composes of some calculations on these areas that are required to be disclosed in a financial statement. So we will discuss on the fixed asset register, which it will give us this sort of information here. So that's this SOE from someone else. Let's go to USB. Let's go to USB and then page 90 and 91. Page 90 and 91. So if we go to page 90, this is page 90. This is the property, plant and equipment. It's very interesting. Their policy is every organization have different policies for your information. Every organization's their policies vary. So here, USB says anything, or USB is another word for University of the South Pacific. Any assets that's is bought but has a value that is over 2,000, it is recognized to be an asset. Anything less than this will not be an asset. It has to be disclosed as an expense, not an asset. However, if there is something that is valued to be 1,000, between 1,000 or 1,000 over, but is a condition or a computer, that still needs to be an asset. So it has to be recorded as an asset. But if it's less than 2,000 for any normal property, any PPE, then it has to be disclosed in the profit and loss statement. That is the policy. And also for depreciation, it indicated the type of is where the life of the assets will last. So here, for example, motor vehicles 10, and used is 5, new is 10, buildings 50, and land not depreciated. So these are the type of information. So if you look at the fixed asset register that I showed you, and that fixed asset register does not include all this information. So this is what it means. Fixed asset register needs to capture all this information for the sake of disclosing your financial your assets, and as well not attracting adverse findings from auditors. So this is one financial statement. The other one is the Office of the Auditor General. If I click into this link, it will tell us that the Office of the Auditor General, its policy, they will not expense and they will not register any fixed asset. Every asset that they acquire during the year will be expensed, so there will be no fixed asset register. So as I said, all policies are valid. They are valid. So before I start showing you how to register your fixed asset register in attempting to help you with your organization in registering your asset, let's click onto this one here. We will see this is the USB asset register form. Now, if you look at this form consists of all the information that you need to fill in. Your faculty originated section, your department, and your room, your purchase order, your requisition, the script of the asset that you're going to acquire. You already acquired, what model, serial number, and so forth. The cost of the asset, the date that you received, and also the supplier name as well as the phone contact, etc. And then their office, probably here we're talking about the business office or the accounts office, they will allocate this information in. Now, the question, how will this information will be fed into a fixed asset register and efficiently utilized by the staff so that they can be able to manage the fixed asset register so that it complies with the reporting? So if you look at this thing, think about 1,000 assets you acquired in a month. Just an example. So if you look at 1,000, so this 1,000 will be captured in our document. So what will be happening after 1,000 that's been acquired during the month, and what will be happening during the before the end of month? So the suspected effort that we can think of is after they receive, say for example, 1,000 forms of these assets coming through in a month, someone will try to copy and paste this information into the fixed asset register. And if you start copying your information into a fixed asset register, it's already a double job. Because why don't we use an Excel, or why don't we use a management information system, or why don't we use an accounting software, MYOB for example, Apache, Sybase for example? Why don't we, or QuickBooks, why don't we use any of the database other than this. This is a lot of work. Imagine if the number goes up. If 10 days you acquire 10. For an organization that manages more than 200 million in a year, that is a lot of work when it comes to asset register. So now we can tell that some of the symptoms that we could not able to provide an effective and efficient data or asset recording is because we created a very tough job for ourselves. Our system is so tough. So this is a capture of one organization which I believe contributed to a lot of issues. Why don't we use it? Why don't we use a recording that is more friendlier and at least more efficient? So I've suggested that I've provide this fixed asset register here. This is the one I really wanted us to go through. Now, I want you to think about that this one is not a silver bullet fixed asset, but it's kind of stand against the register that I have come through in my professional life. And I know certain organizations, they have different recording techniques, but I believe this one will also help with the dying need of all the organizations that are in search for a proper asset management recording system. In this case, this fixed asset register. Now, this fixed asset register is actually have an instruction page, and then it has a setup page. It has a sheet. Then you have a asset sheet. It has a transaction sheet, and it has a category, class, and journal. So here, I believe that this system will enable organizations to at least efficiently and effectively do their recording properly. So if properly and efficiently. So if we look at this, as I have said, why don't we transfer the Word document into Excel? So this is what I prefer. But if you imagine this Excel spreadsheet, this fixed asset register, which I proposed to you, just imagine if we put this one in a server, and that server can be accessed by all departments or all staff, and those staff can be given the authority to edit this thing. So we can put this fixed asset register in the server, and then we share it to budget owners, to head of departments, that, hey, look, you can access, or you can ask your staff to access as soon as there is an incident of fixed asset register. So in a way, fixed asset register will be recorded. And once they are recorded, you can have at least 15 days or at least 30 days to follow up whether all the fixed assets that have been acquired are recorded in this information or in this fixed asset register, and whether what they recorded was actually acquired. So these are two ways. One, you have to be able to look for whether payments made for assets have been recorded for that particular department. So if those departments are located in a multi-jurisdictional or more multi-countries, this is an advantage to have this sort of data at least hooked up into a server that can be accessed. So let's get back to this spreadsheet. Now, the setup page instruction here, when you access this spreadsheet, there, if you have issues or something that I did not explain, which of course I will not explain everything, I will just explain the core ones. But if you have issues with this, as soon as you get this copy of this spreadsheet, you can always refer to the instructions if you have issues or you run into a problem with it, or otherwise just send me an email. So the setup page is where you put in certain information about the organization. So for example, I put here forensic accountants. So forensic accountants, if I put here, specific forensic accountants would also appear here. And if you click into this one, asset, it also appear here. If you click onto all these spreadsheets, it's appearing there. Now, you don't need to change everything here. You actually go to the setup and type, for example, this is X partnership limited. Just an example. If you enter, it will change this one, this heading here, and it will also change this heading here. And it automatically changes everything. Change this one, look at this, change this one, and also change this information. So this is what the setup page is all about. So secondly, I actually redo undo so that it removes the excess limited specific forensic. And this yellow thing here, you can put in your reporting month. So some organizations, they have to operate from January to December. So December is deemed to be their reporting month or year-end month. So you can choose the year-end month here if you like. Or some organizations, they close the financial year by December. That's also December. You can put December here. Some they choose to end the financial statement by March. Some they choose for June. So this is what it means by year-end month. Put the end month that the organization will close the books and do the reporting. Now, some organizations, they don't need tax, so you can put here 0 because you don't need to pay tax to the government. We're talking about charitable organizations. NGOs, for example, they don't pay tax. And also there are organizations that have tax exemptions because they apply to the governments that they serve under, or they operate in a certain country, so they apply for a tax exemption. So for companies that are paying tax, you can put the rate of tax. So let's put here just 30%, for example. Then, if you look at another one, is the class, is the asset class. The asset class, if you feed any information here, they will automatically appear here, this class. This whole yellow information here, if you feed anything here, it will appear here. Whatever you feed into this whole sheet here, for example, the transaction, if you feed anything there, the whole sheet will calculate anything. But when it comes to asset class here, like land, plant, computer, office, furniture, and motor vehicles. These are all coming out none other place except this place. So you can also extend this list if you continue to have more asset classes. Just click here and then copy, for example. Then as soon as you see this in yellow, add something to it. Because that yellow thing here, this spreadsheet will automatically pick it from there when it's from the setup if it's yellow. So the asset class will give you the type of things that you need to record. So if you have lands and buildings, then put lands and building there. If you have plant and equipment, put plant and equipment there. If you have computer equipment, and so forth. So if this, for example, the basic one, we have seen 2 financial statements already. They have given us the examples here. So here we can be able to put the asset class. Why we need to define this asset class here? Because it will be summarized in this asset class sheet. Every information regarding to the summary of the asset, it will be appear here. Secondly, your asset categories. Asset categories, if we continue to feed anything here, it will be summarized here, for example. So this is what it means by changing something here. Remember, it will also change something here. So if, for example, if we go here, type Just example, Tom and Jerry, they are also assets. Tom and Jerry. So if we type Tom and Jerry here, then if we go to class, it will change Tom and Jerry here. But if you go to here, it will not change because Tom is under the asset classes. So it will feed into this one. But if you change, if you decide to say, okay, Tom is also an asset, so we change here and change here, then we can say that the category will also change to Tom. The class will also change to Tom. So this is what it means by the setup. The setup, you don't do anything here and here and here. You do every setup here, it will automatically feed into the sheets. That's what it means by the setup page. So let's replace building into Tom and Jerry here. Yeah. So you can play around with the data. You can don't use it if you're confused, but I think I've been explaining it quite clearly, but as I said, you have an instruction page here. The other thing, remember, you can change these ones. When working with this form, with this spreadsheet, you only allow to do anything when there is yellow. So if you see a cell that is yellow like this, it means it can be edited. You can change anything that you wish to change from. So if you see anything blue, don't change it. It is already automated, it's already formatted. So for example, if you have building here, then you say, oh no, it should be something else. It should be a motor vehicle, for example. So you put motor vehicles here, then you go here and put motor vehicles. So you probably want to change this land and building here, motor vehicle to land and building. So if you change land and building here, you can also bring land and building up here. So basically what it means, like this whole sheet, this fixed asset register is already formatted. It is up to you just to feed information. That is the first rule. Second rule, you have an instruction sheet. That I have explained. Third rule, you only type anything into where the yellow buttons are, the yellow colors. When it's blue, don't. They are formatted, like this one. They are formatted. Okay, that's the third point. My fourth point related to this column. Remember when I saw you a financial statement, they said, 8 years, for example, 8 years. If we go to this financial statement, if we go to, there's a place they said 5 years, for example. So if we go to, so if plant and equipment is, you can depreciate that to 60% or 10%. You can convert that. You can convert your fixed asset register. You can convert it by the number of years that you want to put inside. So you can put here like 20%, 20% here, 20% here, 20% here. These are all for the entire 5 years. And also it can be extended to how many years, additional years, by copy and paste here. When you copy and paste, it will give you another year. This one you can pull it back. This one is okay, this one's here. But you can create year 4 here, and year 6 here. If it's 6, 7, continue increasing it, and then you will put on all the percentages for the year. Make sure that the last year that you reach, it has to be 100%. It has to be at least 100% at the end, or if not, you can keep your 5 years here, but then you can put say 10%. So if you put 10% here, 10% here, and example, we carry this one up, it's only for 15%. You can keep managing this one up to 5 years, then you change, put another extra 5 years here. This is enable you to feed the information into this categories. So this is one thing I really want for you to understand. The other thing, don't touch this sheet. This is already formatted, so it's blue. You don't have to touch it. And so when it comes to recording, you go to transaction. If you go to transaction, you will find, if you go to transaction, you will find that your transaction page or your sheet composed of the blue area as well as the yellow area. So if you look at this yellow area, this is where you need to input your asset that you acquired. Based on the explanation that we had in the determination of asset, you put the value here, put your value here. And also put in the receipt, the invoice, or if it is an agreement between you and the supplier. If this is your supplier, if this is an agreement, put the agreement. Make a reference of the agreement, for example. Put the year that the date and the year that you buy using the invoice number, for example. Always give number for all your asset registry. So, and also give asset transaction. So the transaction type here, it refers to ACQ, DIS, and REV. ACQ, it means acquisition. It means the asset that you're talking about here, which has a life of 70 years and will be depreciated for life for 70 years, and others is 5 years, which will be depreciated for 7 years, will be given this specific number, and it is not donated, but it's disposed, it's acquired. And so keep recording your fixed assets based on the data that you receive, or if you put this information in a drive, for example, it will also relate to how other departments will log into this one and enter their information. So at least the number here must make a reference to the asset that is donated, acquired, or revalued. So transaction type, the other one we already discussed, is the revaluation. The information input here will feed into your reporting, final reporting information, so that it can be feed into your financial statement. So here I've entered all this information prior to our presentation. I've entered this group for 2019, this group of assets. I'm just making a guess here. And also I've included others which were 2020. So the system will read that 3 assets were bought in 2019. And also these assets, as well as the 2020, will also reflected that they are for the current year as we speak, which is 2020. So based on this information, you feed into this one. Based on this, you feed onto this information. The system will automatically pick itself. It will give the categories, the categories that will feed into this. This is what it means by the blue, where you should not touch them. And also based on the information, because it's 70 years, then the transaction ID starts here. It starts count from this one. And so this will also allow the automatic depreciation and also the accumulated depreciation. So this information here will help lead into your final database for the purpose of reporting. Secondly, the asset. So the same information here, you have to also input into here, into this place. So for example, asset number 1, it has to be correspond to asset number 1. Sorry, this is a bit inconsistent, but asset ID number 1 should be at least have the same reference to A01, and this 150 should at least corresponds to this one. And so this information that is here, it's fed to you, it's fed by you, because this information is a land. And if it's a building, you have to change this one to a building. And if this is a building, then you have to update this one. This one is updated from going to the setup, then you look here. Under your tax code, building comes under C, for example. That's how you fit into the C here. So all this land and building here is said to be part of the tax code C. And all this information here, the category here, they are all coming out from this category here. Remember, all building, they are reference to LPU 001. Everything concerns building. So you have to make sure that these are all updated so that system reads it according to what they are registered for. So first, we agreed that these are assets, so we register them. Second, we can determine the cost. We discover cost and the cost models. So when we finish just this column here, and also put the review date, which is the end of financial year, because we put December here, December here, and then as soon as we finish this information, this yellow part here, as well as this yellow part here, once we finish, for this column, I want to touch on this before we move on. For this column, as soon as the asset progresses, we can be able to put in the residual value. So as soon as we finish, again, I repeat what I said, as soon as we finish all this thing here, recording this thing, recording only this thing here, then the system will auto by itself. So you can look at the category of classes that you enter, all the assets. So the details of this asset, just an example, the details of this asset under the assets cost, this is the opening balances. This is what happened in 1999 and then 2019. Then in 2020, it increases by another 330. Okay, let's go to asset and check. Asset and check. So we have a transaction here. Then we agree that this asset here, some are acquired in 2019, some are acquired in 2020. So the system will read that under category, the system will read that this asset has opening balances. Current year, it has an addition balance, and this is the closing. So this is the information for assets at cost. For accumulated depreciation, the beginning accumulated depreciation, like when we click here, this is the accumulated depreciation. It's quite lengthy. This is the accumulated depreciation. This is the opening balance. This is the current depreciation, and this is the total depreciation. And this is the closing. So these are the type of information you can be used to feed into your financial statement. So when your auditor is asking you where you get your information from, you look at the financial statement, you feed all this data into your financial statement, you can tell where your opening balances, your closing balances, you can look at the costing. Remember, we look at the financial statement, it has opening balances, it has closing balance is this information coming from here, coming from category. But same information can be reflected based on the class. So these are the class. It started with combining all buildings, and category, it combines with all type of asset categories that we have. This category here, this information here, is just same as this one, but reflected in different vessels. That's what it means by these two. Don't ever touch them because they are all in blue. They are being formatted. And also, remember, this is a technical area. Accountants normally they journalize their depreciation at the end of any financial year, or on a monthly basis they do a journal entry. Your journal entry can be picked here. Your depreciation, if there are depreciation based on revaluation, they are here. If there are additions here, you can do the journal entry here. And all type of information are reflected here for certain categories, for impairment. All these informations are here. So as long, it's all depend on this information here. Once one is able to consistently with integrity, the data is inputted with integrity, then your life at the end of the reporting schedule will be much easy and easy for you to disclose, help you to compile financial information for the purpose of recognizing and disclosing this into your financial report based on the schedule that we look at based on the financial statements. And as well, they can be easily trailed by auditors. So auditors can look at this, make reference, okay, yeah, this is the reference here, we go and check. And also they can look at an equipment anywhere in the organization, then they can track back to this register. They look at the asset, for example, it's registered with this asset number, then they will trail into the fixed asset, they will say, okay, exactly. This number here, it's also written there. It's, this kind of information. So I think this is what I really want to discuss and let you know about fixed asset register. We actually finished off here, but really to summarize what we have covered, we need to understand that the accounting standard allows us to define as well as to do the costing. And as well as the disclosure with the type of cost models that we need to use. Then secondly, we look at the various practices which I demonstrated failures in most organizations that I serve as a consultant as well as auditor, a lot of failures in most of the organizations. So there are things that organizations need to do differently in order to assist resolving audit issues regarding fixed asset register and fixed asset schedules. So this presentation, I allowed you to have an access into this template and use it if your organization is struggling to meet the needs of your tax office or to meet the needs of your auditors. So these are all the benefits that you actually get. As I said, this is not a silver bullet, but I believe it will resolve the type of problems that I encountered as an auditor, as an accountant that face by most organizations. And I think, although this one is not a silver bullet, but I believe that it will resolve the recording of fixed assets, and my presentation will also resolve around the determination, definition, and determination of cost and disclosure of a fixed asset. So thank you so much for coming into this. So my last point is to emphasize, just make a reflection on this fixed asset register, how complicated it is, and it's just at the end of the day, it will just give us this information at the bottom, just this balance. But then look at the fixed asset register that I wanted to disseminate for the purpose of your learning. So thank you so much.